Motor has handed in a steady set of numbers. In fact, they've managed to surprise the street on the upside as far as the bottom line and operational performance goes. Revenue has come in at 5,391 crores, bang in line with our estimates. For profit figure, it's come in at 265.6 crore rupees, slightly better than what we were factoring in. EBITDA has come in at 511 crores, up a good 41% year on year, implying a good margins performance as well, 9.5% versus 8.8% compared to the same quarter last year. We were penciling in margins of around 8.9%, so clearly there's a very good 40-50 points beat as far as the margins performance goes. Management has said that it's been a very robust quarter. They've logged in highest ever revenue, highest ever EBITDA, highest ever profit. So it's definitely been a record quarter for the company. And during the 9-month period, so far this fiscal, they've been focusing on working capital management. They've improved operating performance as well, which has helped generate a free cash flow of 1,616 crore rupees. So these proceeds essentially the company has utilized to bring down their debt levels. There's lean stocks with the dealers also, which helped unleash blocked working capital across supply chain. Exports have come in at a healthy 2.6 lakh units, up 20% year on year, and this is despite the container shortage. So had it not been for the severe shortage of container, perhaps the company said that the export performance would have been even better than what it is. Sales of premium brands have grown according to them in both domestic as well as international markets. They're confident of rural demand sustaining. Urban demand also, they said, is picking up. As far as the budget goes, they expect the budget to announce measures to boost consumption, to ease woes of Motown. They expect or rather hope for a review of GST that will also boost demand, especially for two-wheelers. They see two-wheeler sales to be higher in Q4 as well, mainly because of low base effect of last year. But yes, international markets is something that they're witnessing a very strong growth. They plan a series of product launches in the new fiscal. They're investing in a series of new EV products as well. They expect TVS Motor to beat industry growth in India as well as overseas. Robust revenue growth, increased premiumization, and tight cost control. These are the key drivers identified by the management to drive the robust performance that they have delivered, and they are quite confident and hopeful of sustaining this kind of trajectory. The management also said that it's the supply chain management, working capital management, which has improved the operating performance. The focus on cash will be a key priority, a key focal area for the company going forward as well. They said that the core demand is back. It's no more a situation where they're banking on the pent-up demand from a consumer standpoint. They expect the government to sort of compensate for lack of MEIS incentive as well. So they're awaiting more clarity on PLI scheme. They've taken a price hike both domestic and international markets, and going forward, in fact, they will push on or rather focus expanding their digital platform and digital play overall as well. So lots of interesting things laid out by the management in the TVS Motor Con call today after the numbers came in. Let's see how the stock opens, but yes, definitely a good set of performance amid headwinds like container shortage, commodity cost increase. So they've still, despite all of that, managed to report a good set of numbers, especially bottom line and operational performance.